Hi everyone, myself Prithvi. Today I welcome you all for my YouTube channel. In this video, I would like to discuss about another company fundamental analysis. That company is known as Whirlpool. So Whirlpool company is in the electrical home appliances space. Why I have taken Whirlpool for my fundamental analysis is mainly because the Whirlpool future growth outlook of this company is a very good company. So the company is consistently compounding its value by year on year. That one is a very important point. Nextly, the company is generating good returns for investors from the last 5 years. Nextly, the more important point is that the company's stock price has been corrected by 26% in the last 2 months. Nextly, the stock price at the current valuation is very attractive for my perspective. To know why, I will be taking you to the full fundamental of this company in this video. Please watch this video till the end to get to know how the Whirlpool company stands at the current valuation, how much returns we could generate by this company by investing in it. So let's start with the video. Firstly, I would like to discuss about the business and the products of the company. So the Whirlpool company is a US based company. So the Whirlpool Corporation in USA, it's the ultimate holding company of Whirlpool company which is there in India. Whirlpool is a leading manufacturer of home appliances in India, starting from refrigerator, washing machine, air conditioner, purifier, micro ovens. Nextly, they also added Elica kitchen for their value added products. So recently in the 2018, they have acquired a 49% stake in Elica India Private Limited to add to their portfolio. They are also adding Elica kitchens to their portfolio. It is also contributing good revenue for them in the recent 2 years. So these are the outlets which they have opened in the last 3 years. So this is all the products which they are producing. So let us know how much revenue is being contributed from the each product of the company which has been manufacturing. The first product is the refrigerator business, which is contributing almost 62% of the company's revenue. Nextly, the washing machine products, which is contributing 22% to the revenue of the company. So nextly, the air conditioning is also contributing 6% to the company. Next, other products which contributing 10% to the company. Total overall 100%. So the company's main revenue for the business is that the refrigerator business. So the main revenue is coming from refrigerator, secondly the washing machines. So these are the two products which is contributing more for the revenues of the company. So the one important point which I want to make is that how there is a growth for the company in the future. So in the future, the company has a lot of growth potential in India. Why? Because the low penetration of these home appliances which is there in India. So the refrigerator in 100 households, only 33 households having a refrigerator. This is a notable point, the fridges. So nextly, the company's washing machines are only having a 13% penetration into the Indian households. So again, there is a lot of room for potential to grow in that washing machine business. Next, the water heater 10%, air cooler 10%, micro oven 5%, air conditioning 4%. So these are the low penetrations. So as you can see in the figures of the penetration which is there in India of home appliances, so which is still low. So there is a lot of headroom for this kind of a home appliances companies to grow because of the lot of potential is there in Indians households. Lot of requirement is going to happen as the living standards of Indians is going to go up. So next, another important point is that the working age peoples in India is improving. That one very important point. So the peoples in India is almost in the medium age of 22 to 25. So this is the working age population is increasing. If the working age population is increasing means the income of the peoples is also increasing. So the current per capita income of individuals stands at 1,35,000 rupees. So which one very important point. In the last 5-6 years before, the India's per capita income was in the 2014 and 15, the per capita income was 74,000 rupees. So in the time span of 6 years, so the per capita has income doubled to 1,35,000 rupees. So next in the 2021, we are expecting it to come down because of the COVID reasons. and a lot of work, lot of job has been lost by the individuals. So there is no salary hike is there. So because of all these conditions in India, so there may be a slight drop in the per capita income in the 2021 by 3,000 rupees. So it may come around 1,32,000. It's a forecast for FY21 year. So this is all about the per capita income. Nextly, the in-depth narrow range analysis is that the Indian middle class households is the first consumer for this all kind of home appliances. So Indian per capita income is very much important for this kind of a companies, because there are the more consumer is coming from this segment. So firstly, the Indian middle class households per capita income is almost $3,000. It comes to 2,19,000 rupees. So this is the per capita income of Indians in middle class. So this one very notable point. So by seeing all this, you could able to understand how much headroom is there for this kind of home appliances companies, and Whirlpool is having a good value for its brand, and people are trusting this brand in the home appliances space. Because of that, this company plays a very important role in the headroom of potential to grow in the next future. So this is all of the future growth outlook of the company. So let us look at the management commentary, what they have said in the near term, what is the future growth outlook, what the management has said. So the management commentary is that, so there is a big recovery which they have seen in the Q2 of FY20, because the COVID was the major factor for them. In the first quarter of the COVID, the washout quarter, and the next Q2, Q3 onwards, there is a huge jump in the sales of the companies. That one is a very good point, their commentary by the management. Recent times there is a inflation pressures which has been putting a raw material cost for the companies. So recently in the Q2 ending, the company has taken a price hike of the products, because the inflation pressures, it's putting a more cost to the raw material of producing. So this one makes a good impact in the Q4 results of FY21. So nextly, the management also commented that, so there is a double-digit revenue we can expect in the Q3 and Q4 of FY21. So Q3 December has been already declared. Q4 of FY21 has to be declared. So still it is in waiting. So in the next fourth quarter, as every home appliances space, as you can see, the Cromptons, the Blue Stars, so this company has declared a stellar results. So the Whirlpool also we can expect good results to be declared in the Q4 of FY21 that may come in the next 2 weeks. So this is all about the management commentary which they have said. So they are expecting a double digit growth in the Q4 of FY21. So nextly, let us discuss about the shareholding pattern of the company. So when you come to the shareholding pattern of the company, the promoter is holding 75%. So they have not decreased a single percentage in the company. So the next, the FIS is holding 3.38% in the company. So next, the DIS is holding 11.01% in the company. Next, the public is holding 10.61% in the company. So looking at the shareholding patterns, so because of the promoter chunk is more, the FIS and the DIS also having a good stake in the company. The company's shareholding pattern is good. So there is no negative about the shareholding pattern. The shareholding pattern suggesting a good and healthy shareholding pattern of like every company. So next, let us discuss about the financial statement of the company. So when you come to the financial statement of the company, first I would like to take you to the quarterly analysis. So in the quarterly analysis, the one important point which you have to observe is that, so the December 2020 is the quarter where every December quarter where you can see there is a decrease in the operating margins. So there is a decrease in the profitability of the company. So there is a decrease in the revenue of the company. So that is one of the very important thing which you have to note. So after that, from the March and the June quarter is the best for them. So as you can see in the quarterly analysis statement, the June is the highest sales which will be happening for the company. So that will be also at operating margin of 15% highest. In the FY21, in the June quarter, what has happened is that, so there is a corona thing was there. Because of that reason, the company couldn't able to post a good results. This was the quarter where there is a huge sales was happening. So because of the corona, they couldn't able to post a good numbers, that has impacted the financial statement of the company. So next after that, there is a Q2 and a Q3 was a good results has been declared by the company. So this is all about the quarterly results. So next I would like to take you profit and loss statement. So since from 2009, the company's sales is significantly increasing. So it is increasing at the CAGR rate of 11% for 10 years. In the 5-year CAGR is 13% and 3-year CAGR is 15% CAGR, it is growing. So in the trailing 12 months where you can see, so this is the FY21 figures where the revenues have been dropped when you compare to the previous year of 5,993 crores. So this has impacted current stock price and current valuations. So even the operating margins is also impacted in the current financial year. So this company's operating margins have been impacted in the financial year of FY21. So the profit is also impacted. Because of that, the earning per share has been dropped. So other than this year, the company's sales is significantly growing. So you couldn't able to notice a single year where you can see a degrowth when you compare to the previous year from the last 10 years. So which was very interesting for me. So even in the earning per share, even in the profit of the company also. So as you can see, the financial statement is a very good. Since from 2009 to 2020, you couldn't able to find a single year there is a degrowth in the revenue of the companies. That one is a very big positive thing for any kind of an investor to invest in that. So nextly, the profit is also improving. Their operating margins as stagnant. So the company's operating margin looks at 11%. When you compare to the peers in the home appliances space, they are operating at the 8% margin. When you compare to those people, their operating margin is very good. So nextly, let us discuss about the financial ratios of the company. So in the financial ratios, so the current stock price is trading at 2,163. So in the PE, price to earning of 92.4, it's the highest. So it is trading at a high PE. So the average PE of this company trades usually in 5-year average PE is 49.6. The debt is 0. They don't have a debt itself. That one very important thing. Next, the debt to equity is 0. Next, the return on equity is 20.3%. Very good. Return on capital employed is 28.6. Very good return on capital employed. The interest coverage ratio is 18.5. So by looking at the financial ratios is a very good. I have not seen any companies in the home appliances space which is declaring this kind of a results, which is having this kind of a financial ratios. I have not seen that thing in other home appliances space. The one negative thing which I found about this company, the company's return on capital employed is decreasing from the last 5 to 6 years. So that one we have to keep it in mind. So the company is couldn't able to generate good returns in return on capital employed what they have deployed. So that one is the negative thing which I have find out about this company. Nextly, in the future, what is the future projection of FY22? What the revenues we can expect? So what is the profitability? What is the earning per share? So I am going to take you to the projection of FY22 earnings. So the current FY21 revenues is 5,474. That is a trailing 12 months. So if we take for FY22 growth is 15%. So if the company's revenues grows 15%, the revenue is going to be in the FY22 is 6,295 crores. So in that case, the operating margins, let's take it as 11%. If the operating percentage is 11%, the EBITDA, earning before interest tax, it would be 692 crores, and the tax which will be 27%. The tax cost 186 crores. So the PAT means the profit after tax would be 505 crores. So the earning per share, it would be 39.7 rupees per share. So the total outstanding share of this company is 12.7 crores. So if you divide that profit after tax with the outstanding shares, you will going to get the earning per share. It is 39.7. If you divide with the current market price, so current market price is 2,163 rupees. If you divide that, you're going to get the actual PE for FY22 earnings. The actual PE is 54.4. So in the FY22 earnings is very good. The PE at the current market price is also very good. So looking at the current projections of FY22 is very good. So what we can expect in the near future about this company stock price is that, so the company made an high of 2900, so which is a high 52-week high. So from that levels the company as stock price has corrected to 2163 rupees. So almost 26% is the correction what we can see in the stock price. So there is a potential to grow, there is a potential to go to that stock price because the company future growth outlook is very good. So what we can tell about this company is that you can invest in this company. Even I also have this company in my portfolio. So before any kind of a decisions you want to take about investing in this company, please do make your own analysis, consult your financial planners, then you can take a call in investing in this company, which I generally prefer. This one company is a good opportunity in the India growth story to invest. So in the next videos and all, I'll be coming with the good fundamental analysis videos. Till then, do like and subscribe to my channel and watch the videos and enjoy the videos, and happy investing. Bye bye.